I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. It's Friday, and it's time to talk to the markets.
Well, how are the markets being affected with Brexit, no Brexit, talks falling apart, parliamentary votes against it? Is Brexit a good idea to start with?
Oh, yeah. It's an unbelievable irony, because if you look back in history, in the early 1800s, Britain went to war against the French revolutionaries, and so they then helped defeat them and helped end a dreadful experiment in authoritarian government. It spent a lot of money and blood. Then in the 1914-18 war, again, that was a military dictatorship out of control, so England again spent blood and treasure on protecting Europe from their own experiments in authoritarian government. And then the same thing, more dictatorships in the Second World War. And now the supreme irony is that England is being dictated to by a bunch of bureaucrats in Brussels. I've called it Moscow on the Maastricht, which is not geographically accurate, but it's politically accurate. And they have yet to assume the privilege of state murder. Every experiment in Europe in authoritarian government has ended up with state murder. So here you have England for a couple hundred years, who 3 times helped fix European experiments in authoritarian government, are now under an unelected bureaucracy in Europe. It's so bizarre I can't believe it, but at any rate, and the problem, I guess, is Prime Minister May is not at the start said she'd go along with Brexit, but she was not a strong supporter of it. But hopefully England sorts itself out and gets itself out of this horrible experiment in authoritarian government. I'm hopeful, because this movement, popular uprisings around the world are collectively could come together as a great reformation, when actually in the 1500s bureaucracy went out of control, and the only organization that it could exist in then was the church, and the bureaucracy corrupted the church into a murderous state. And then in the early 1600s, the Reformation started. It's gone down in the history books as the Protestant Reformation, but I prefer to call it a Great Reformation, where every institution of government or every agency of government was looked at and either trimmed back or dumped, or, it was a movement towards freedom. And then you've had now about 125 years of experiment in authoritarian government, and under Obama's administration in the U.S., they just went absolutely berserk with all kinds of ideas, and a popular uprising in the States ended up with President Trump as its executive, and is making headway, but it is violent because the agencies of the deep state, who are within the Department of Justice and within the FBI, have become totally corrupt. And can you imagine in parliamentary history, the last couple of hundred years in England or Canada, where you have high-up officials in the justice system or in the police investigative system deciding they don't like a president and they're going to get rid of him? I mean, this is trying to depose a sitting president using government agencies is unthinkable, and it's also treasonous, and I don't think it will be ultimately successful. So we live in extremely interesting times. I keep telling my colleagues that to be alert and aware of what's going on and being following and watching this excitement in the political markets is a privilege to be watching it, and then also, from my point of view, to be able to write about it. It's fantastic times. And I do believe that ultimately ordinary citizens will be successful through this process of popular uprisings. But you look back to the late 1980s in Eastern Europe, under the fist of communist authoritarian government, a popular uprising threw them off. And in late 1989, they tore down the Berlin Wall and then eventually defeated communism. But of course, ambitious socialists then left the idea of promoting socialism and communism in the Western world and just got onto the environmental bandwagon and then ultimately into the global warming thing as the means to control people. And this is also, I think, running into a wall of resistance. So very exciting times. So the political markets have been just as wild and volatile as the financial markets. So it's fascinating.
Bob, some of the stuff I've read said with Brexit, if they leave the European Union, it'll be a couple of years of economic hardship for Britain, but then bright skies ahead and they'll really do well. Is that your outlook?
Yeah. These agreements done some years ago were bureaucrat to bureaucrat. It's like the NAFTA agreement between Canada and the U.S. It was designed by bureaucrats for bureaucrats, and they didn't include the cheat, which was that the Canadian government depreciated the currency relative to the U.S., so there was no point having a trade agreement if you could cheat on the price. And of course, Mexico's currency went down as well, so the U.S. was hooped on that. But they actually, Britain should just unilaterally declare free trade. So should Canada. And but there's a more overriding thing on that one, is that we're probably into a recession. Of course, the National Bureau of Economic Research, the NBER in the States, is the body that determines when the recession starts and ends, and they're usually 1 year after the recession actually starts. And on our work, when you're in financial inflation, which we have been in, once the market blows out, and it has, and turns down, the recession usually starts about the same time. Whereas you go back to ordinary markets, in the 1950s and 60s and into the 70s, you would then have a peak in the stock market, and then, say, 10, 12 months later, the peak in the economy. And this is why economists have put the stock market as part of the leading indicators. But when you get into financial bubbles, as we have been in, the recession starts pretty close. Like, for example, the 2007 bubble peaked in the middle of October, and they then determined that the economy peaked in that December. So that's close enough. And if you go back to 1929, the stock market in New York peaked in September, and the NBER determined that the recession started in that August than the previous bubble. It was 1873. And decades ago, when the NBER started going, they then retroactively determined business cycles all the way back, I think, to 1850s. But at any rate, on the 1873 bubble, the stock market in New York peaked in September, and the recession started in that October. So what you have, and when you're in a financial bubble and it completes, usually the recession starts rather close to the bear market. So this market has had a mighty whack since the peak, and it's my guess that the recession is probably started. We know that it's slowing rather quickly in China, and I remember a headline of a few months ago where their apartment vacancy rate was calculated to be at 22%, and that represented 50 million empty apartments. So I think the global economy is slowing, and I think we'll soon find that the economy in North America is slowing as well. It's the way it works. You have a great bubble, it ends, and the recession starts.
We'll have more with Bob Hoye right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye, and by the way, we'll have a listener question answered in our third segment of the show. Bob, with perhaps a slowdown in the markets or a recession, is gold expected to pick up from here?
Yeah, the work we've done on gold, which actually I did a very long time ago, I just simply took the real price of gold. Well, you get that by dividing the price of gold by the consumer price index. And in the senior currency, I started in 1700 with that and did it annually by hand. And then it tells you a story, because there's long periods when England as the senior economy and the senior currency was on a gold standard. So effectively no change in the price. But when you go through a financial bubble, the real price of the gold goes down during the bubble. Gold stocks underperform, or in this case, it's been a disaster, because gold's real price peaked with the speculation right out to 2011, and as did basic commodities, and then it's been in a decline since. So the way to look at this now is that the gold deflated by the consumer price index since early 2017, I sort of consider that it's trying to base as the financial markets were blowing out. And so in each of the 5 previous great bubbles, including 1929, but once the bubble was over, the real price of gold turns up, basically because base metals, energy prices, crude oil, head down. And with the real price turning up, gold mining becomes more profitable. Their costs are kind of limited. And also this is very good for exploration properties as well, because their eventual valuation will go up as well. So in a post-bubble contraction, most everything goes down relative to gold. So that's the only sector where one can confidently expect a bull market is in the gold sector. So, but unfortunately, the stocks, and we were onto this last year, that if the stock market rolled over and failed in the last quarter of the year, that was necessary to set up the bull market for gold, but it would also bring down the gold stocks, which it did. But we've got our comfort indicators, and but the 1st of November, there was a couple of them turned positive enough that we said accumulate gold stocks on a declining market. And it did decline for a few weeks, but it got us in on some of the gold stocks at a decent price. But we wouldn't chase any rallies because there's financial storms going on. But eventually, we will see a great roaring bull market on the gold sector, and I'm looking forward to it.
We'll have more with Bob Hoye and the answer to a listener's question right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, our listener question: is it too soon to get into any future bull market in commodities via ETFs like the one for uranium? The URA went to the moon in 2011. Apparently a lot of nuke reactors are coming online in China, Iran, Saudi Arabia, and elsewhere. Also, is it too soon to be thinking about agricultural ETFs?
Yeah, it's a good, thorough question. And we're just going to back up here that in 2011, every commodity was soaring up, and we have a very special indicator, peak momentum forecaster, and it sort of relates to the credit markets. Now, it was soaring up to the point where it gave us a sell signal. I think it was April or May of 2011. Now that we applied to the hottest item then, of course, were commodities and gold and silver. So we then advised that when we got one of these signals, usually a cyclical bear market for the hot items would follow. So this is there when we became bearish on the precious metals and on the base metals. And, it worked out. But, you can look at the fundamentals on uranium and say, there's new nuclear production coming on capacity, but that may not drive the price. What drives commodity prices is where you are in the business cycle, and also where you are, let's call it a bubble cycle. And now we are in a post-bubble contraction where most commodities will be weak. And this gets us into our formula where gold outperforms most commodities, so it ends up looking good. So on crude oil as well, we were long-term bearish on crude oil and long-term bearish. Now what we did decades ago was where I could get numbers on copper, I think back to the 1830s, and deflated that by the CPI, and that works as well. It's just opposite to gold, that in a bubble, copper can go up and then it goes down. So the overriding thing on the commodities and uranium, and also the question included about agricultural commodities, is that it's a bear market for commodities And of course, there will be business cycles where you come along and where we may be in a recession now. A few years hence, there'll probably be a weak recovery in the business cycle, in which case you'd get a pop in most commodities. But here on the near term now, we're looking for commodities to firm up a little in the first quarter, but we have to get past January, because often you can have, well, this is what we talked about last September, was the possible dismal low for crude oil in December, January. And at the moment, they had a nice rebound in crude, and it's kind of overdone. So the technical side says you can downtick in crude oil, and the seasonal side says, yeah, you can, January's not over yet, and you can have a seasonal low in January. So, but a modest bounce for commodities after this in the first quarter, but no lengthy bull markets. It's just not going to happen, because one of the other features of the post-bubble condition is that the senior currency becomes chronically strong against most commodities and most currencies for most of the time. So it's one of the things that drives policymakers crazy, and certainly drove economists crazy in the 1930s. They just couldn't figure out how you can get inflation going again, and people were hoarding their cash, and they had the New Deal under Roosevelt had a program of arguing against hoarding of cash. Merchants put little signs in their front windows about don't hoard cash, spend money. So that's probably ahead of us, and it'll be fascinating to watch.
Bob, thank you so much for chatting with us.
No, there we are, and look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. As you heard, questions to Bob will be answered. You can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.